Hello, hi everyone. This is Arun from Investing Gurukul. So today we'll look at the Nifty and general market status. As you know, for the last few weeks and months, the market has been bleeding, and it's the bottom seems not to be there. So the question on everyone's mind is like, okay, are we near the bottom, or is there more to fall? So just to look at this, like let's look at how we have been trending for the last 15 days. So this is a Nifty sectorial performance. I have taken one from the 14th of February, like 14 days back, and then one today. So as you can see, there is things have only become worse, and right. So whether you look at the Nifty index or Nifty the auto index or FMCG, all the main core economic sectors, they've been like going from bearish to strongly bearish. Even the ones which was, kind of performing fine, like your kind of pharma and IT sectors, earlier, IT was doing quite well, and even now that has turned bearish. So essentially, that means that for the big money, there is no place to hide. So every sector is now bleeding. FIIs are still selling, and domestic investors are also not sure, like, where to go. So I'll look at this from a technical standpoint today. So if I look at the Nifty charts, so what we have seen here is this is a monthly chart. So you can see that it's been quite bearish, but we are still in a monthly uptrend in some sense. So there is a support that will come to the market around 21,777 or 21,800. This is where I think we will at least stop for some time. But whether there is more downward movements after that, that will depend on how things goes externally, whether, with tariffs and, whatnot. So for now, my take is like we will have a pause around 21,800. But but my gut feel is that we won't stop there. We will probably come around to this point, which is 22, 250. This is where I feel we will kind of stop because this is a falling market. So, and it is falling from a top. Just consider that, you're in a swimming pool where, where you have different steps and layers of, like different heights on which you can actually make a dive. The smaller distance you dive, the smaller distance you go into the pool. The longer, higher distance you dive from, the more in depth you're going into the pool. So the more you dive from the top, it's like you will touch the near the bottom and bottom. So that's the effect that it will have. So for me, I don't think we are near the bottom yet. So we will dive some more, and I think we will probably overall correct around 20,200. There is a chance we could have a support around 21,800, but I'll still see wait and watch till then. So my view is be on cash. Look at the every week or every 2 weeks. Look at your Indo index. How the sectoral index are performing, and then start monitoring which sectors are actually performing better than the others. So if you look at this, for me, the bank Nifty is somewhat okay because it is bearish, but it is now bearish consolidating. How do I know that? So I go to the bank Nifty. So here I can see that it has been falling, but then it is trying to, stay in this place, 48,000. But let's say in the next week or so, then this support is lost, then again, this will also fall down. So for now, it is bearish, but at least it is trying to not fall too much. But in case, let's say, if you take an example of, say, a auto or a FMCG, right? So say next auto, you can see that it was consolidating, then all of a sudden it started failing as well, and now it is failing faster. So for me, this looks quite bad from an auto sector point of view. So the way I will position is I look at the sectors which are starting to consolidate and starting to kind of reverse. So those are the sectors I will see, if I can start investing in those stocks. So for me, right now, your bank sector, the general bank is good, but even in the even in within the banks, you can see that the PSU banks are bearish to strongly bearish, while the private sector banks are kind of doing good. So I look at the private banks stocks, HDFC, ICICI, and so on, and then I will look at the metals. Metals are good because it's also kind of consolidating. So I look at the metal stocks, but even in the metal stocks, I look at the kind of metals that is actually doing good. As you know, the precious metals, gold and silver, are actually making high after high. So those stocks which are reliant on gold prices or reliant on silver prices, those are the kind of stocks that you should look at. Example, gold would be, say, Muthoot Finance or Manappuram. These stocks, are better because the more the gold price, the more the bottom line for them. In the same manner, silver is also doing well. So Hindustan Zinc is another stock which is very good when it comes to silver. And also copper is reasonably doing good. So I will say Vedanta. So these are the kind of stocks I'll look at. Other than this, in the metals, HEG is another one I still prefer to hold. They are actually consolidating, or in the from their business point of view, but the stock is falling down, but it's not, the business is not doing that bad. So I'd look at these kind of stocks. I'll have them in my watch list. And as and when your um, market corrects for those sectors, then that's when I'll probably move into these stocks initially. And then from there, I'll see how it goes. So for now, I'm very bearish on the market. It is going to fall a bit more. We'll have to wait and watch over the next weeks and months. My gut feel is around the first week of April or second week of April. By the time we will know the US tariff situation with India, I think that's probably when we will make the clear bottom and then probably move up again. So yeah, that's my view for this week, and hope you can stay off this one and then make sense of it and do well. Thanks.